Okay, good morning, folks, and welcome to a quick morning update and members stock chart request. We're going to kick things off first with the health of the markets this morning, today being the 21st of February, about 4:50 in the a.m. All right, so the S&P futures, we are down again this morning. What's concerning here on this daily chart is that we broke down below the lower band of support. Let's go to a 4-hour chart. All right, so our 4-hour chart is showing our Bollinger Bands, upper band in red, lower band in purple, in an ever-tightening channel. The fact that we broke down below the lower band of support and that we had a very rough week in terms of price 2 weeks ago should be a cause for concern that the path of least resistance may in fact now be to the downside. But it's too soon to call that. I went over this with members last night on Market Wrap, our strategy for trading this market, and we also reviewed it over the weekend. So members, if you haven't watched our strategy sessions, please go back, check the week ahead commentary, check last night's Market Wrap. Now today we have a lot of economic data that is set to be released. We have the PMI, the Purchasing Managers Index, set to be released this morning. Any number above 50 is a sign of expansion in the economy. Any number below 50 is a sign of contraction. Now, if we miss on this number, it is significant, more so than prior months. Why? The reason is that we had inflation data that came out these past couple of weeks, hot and heavy. So if we have inflation in the economy, yet we're seeing a stalling of economic growth, that is stagflation. You are going to see the markets sell off until the Federal Reserve minutes are released 2 p.m. this afternoon. And that will give us a guide as to where the Federal Reserve may be looking to head in the coming months in terms of rate hikes. As it stands right now, we have about 3 rate hikes priced into this market. But remember, Yellen was the Fed chair, not Powell. So today's minutes are really going to be subject to additional interpretation and speculation as to what Fed Chair Powell will in fact do. So on this 4-hour chart, we've broken down below this lower band of support. Now to the Dow futures. They had a relatively weak day yesterday. No new daily low yet today. Note again how these Bollinger Bands are very, very tight, and we're beginning to lean towards that lower band. So a warning flag is on the track here this morning. Let's check the bond market. Now it looks as though we're getting some relief on yields because the price is beginning to break out of this downtrend channel. But that could all change with this morning's economic data. If that number comes out very strong this morning, the PMI number, you will probably see a pullback on yields. If it comes out weak, you will see the Treasury note rally and yields pull back. And then, of course, the Federal Reserve minutes at 2 p.m. The dollar broke out yesterday. And that was very disappointing for me to see because we do have commodity positions on the table. I don't come on here to talk my book. We do have positions on the table, and they did not do all that well yesterday. At least the commodity positions didn't. We booked some profits on Shopify. I'll go over that chart in a moment. But the commodity positions were hurt due to the rallying U.S. dollar. Now, if we break back down below this support level here, well, then it's game back on for the commodity names. But as it stands right now, we are seeing strength in the dollar, and that will pressure our commodity positions. Gold, we saw a bullish key reversal last period. We're up slightly this morning, very slightly relative to yesterday's price action, which was quite weak. We have retraced a good majority of our gains seen thus far in February. We are now back down lower on the month of February. Now, on a monthly chart, we do have a breakout on gold. Longer term, we're still bullish on it. Shorter term, it's very, very speculative. No doubt about it. I'm not going to speak my book. Oil may be attempting to catch a bid here. We're down this morning. And by no stretch of the imagination would I go buying oil just yet. But what I'd be looking for is a rally up and through this 20-period moving average in blue at 64.99 on a 4-hour chart. As it stands right now, we are really testing a lower band of support. So I would not be a speculator of oil quite yet. I would rather buy strength. And of course, I would rather see that strength come on the heels of a weaker US dollar. Now let's get to members' stock chart request. This is where we review the symbols our members submit for me to review. Let's get to it. Shopify is the first name up. This is for fellow member Evan, my Bitcoin millionaire. He has a couple of charts coming up today. So Shopify, we bought last week in anticipation of a breakout above the upper band of resistance. Yesterday, we did in fact rally and we booked profits. Why did we do so? We did so because we were leaning up and into that third standard deviation Bollinger Band and the markets were rolling over. Had the markets not begun to roll over and had we stayed near the upper band of resistance, we would have stayed long. Do I believe that Shopify can move higher here? Yes, I do believe it can move higher. But if this market rolls over, Shopify has shown us that it will trade down with the market. So we had a quick profit in the name. We booked those profits. We moved to the sideline. We'll look to re-enter if the market begins to show signs of strength and Shopify consolidates a bit and then appears poised to move higher, much as it did last week within this triangle formation. So I still like the name longer term. Okay, the next chart up is Kirkland Lake Gold, weekly chart. What's key here to identify is that we have overlaid here in gold line chart the GDX. That's the gold mining ETF. It puts you long of the gold miners. In green, we have the US dollar. And for the most part, you could see that the price of Kirkland in candlestick trades in tandem with the GDX, which is what you would expect. And in fact, it's outperforming the GDX by a long shot. And it also trades inversely of the US dollar. Now, the US dollar has caught a bid these past several trading days, and as you could see, it's meant weakness for Kirkland. Now, here's what I see as being a larger problem for not only Kirkland, but the gold miners as a whole. We have, in the past, seen an inverse correlation between the mining names and the dollar. The dollar goes down, the mining stocks go up. Over the past several weeks, that inverse correlation has been really a one-way street, meaning if the dollar goes up, the gold stocks go down. If the dollar goes down, the gold stocks may go down. Case in point, take note of where we peaked out back in early January. The dollar was still moving down, but the price of Kirkland moved down as well, as did the GDX. So I can conclude by this that this is not a company-specific problem. What this is an industry-specific problem. And what's more concerning is that you have gold, which is broken out on a weekly basis, yet the price of the gold mining names is lagging the price of gold. What gives? Personally, I believe that gold is perceived as a store of value and a hedge against a market correction and a dollar that is deteriorating, and of course, against inflation. Whereas the gold mining names are viewed as a speculative asset. And who really finds the gold mining stock sexy when you have the FANG names, which are rallying as well? So I think it's a matter of perception for the gold stocks. But unfortunately, in the short term, perception is reality. So back to the chart of Kirkland, I can't buy this stock because we're putting in lower highs and lower lows week over week. We've broken down below the lower band of support. And that doesn't make the GDX all that much better. It's broken down as well. When would I buy the shares? Daily chart. So for me to put my toe in the water and accumulate shares of Kirkland Lake Gold, I need to see one of two things, preferably both. And what is that? Well, we've rallied off the lows of the month. I would like to see a pullback and a retest of support, but we may not get that. But if we do, that's good stuff. We can open up a position down here, put a stop right below, because if we break down below 1309, folks, we're going a lot lower. Now, if we hold and we rally and we break out and above this upper band of resistance here, well, then it's game on, because then we could build a position, add to our position on strength. Now, need it pull back to the lower band of support for me to open up a position? No. If it closes above this upper band of resistance, so let's call it 15 to 1530 ideally, then I would open up my position. Why? It's because now we're beginning to break out of the trend of putting in lower highs and lower lows, and we're back into the trend of putting in higher lows and then higher highs once we clear 1530. And once we get above 1689, it's game on, because now we'll have cleared resistance, historic resistance, and then it's clear blue skies above. And that will in all probability mean that the dollar is in free fall. So that's my play on Kirkland. Next chart up, Tesla. Weekly chart. I spoke about Tesla a couple of weeks ago. We were bullish on it and cautiously bullish, I would say. We did see a reversal week last week. We closed above the upper band of resistance. This week we are now retesting. I like the chart. Stokes appear poised to want to move higher. Remember, I was talking about this cup with handle formation a couple of weeks ago. We have broken out yet again. We did so back here, but it failed. We're back above it now. We're going to retest it. Let's go to the daily chart. All right, so on a daily basis, while the chart looks good, it's being challenged, right? We rallied on the 16th. You saw sellers move in, as reflected by these topping tails. Again, yesterday, we rallied, sellers moved in, took it off the highs of the day. So what does that tell us? It tells us that buyers back here, buyers back here, buyers back here, and so on, all the way back. What they're doing is they are selling strength. Does that mean that Tesla can't move higher? No, it can move higher, but we need to get a close above 335 per share. If we get that close, well, then you could nibble on the shares. When would I add to the position? Let's update the chart. I would look to add on a close above this upper band of resistance, because if we close there, what does that imply? It implies that the vast majority of these wannabe sellers have been made whole, they have sold, and they are now out of the way, and now we could look forward to new resistance levels to challenge. So that's how I would play Tesla. I would buy on strength, not weakness. That's a big mistake traders made, is buying on weakness. Now, if it's extreme weakness, meaning RSI down below 20, we're at historic support, I would entertain a trade to the long side. But we're not there yet. We're in the middle of a trading range, so this can go on for weeks. So there's no sense in trying to gamble that we are poised for a breakout. I think that in all probability we will move higher. I would wait, though, until we get a close above 335, then a close above this upper band of resistance here at 340 to 340, 350. Next chart up, Varinus Systems. Weekly chart. We broke out last week above the upper band of resistance. Thus far this week, we have a bearish key reversal. What are we doing? We're retesting the breakout point. It is healthy. I would try to wait until one of two things to occur. One, if we do not break out to a new weekly high, I would wait until as long as you could, until Friday end of business, to ensure that we close above this upper band of support. If we do not, I would avoid the shares. Why? Because that's a bull trap. If we break back down into this trading range, you definitely do not want to buy the shares then. If we manage to close above this upper band of resistance, you can nibble on the shares and then look to buy more on a rally up and through the week's highs. We have no breakout yet on Stoch RSI. In fact, we're putting in lower highs, so just be careful. Daily chart. We broke out last week, as you can see. We already discussed that on a weekly chart. Again, a bearish key reversal yesterday, so it's very consistent, this chart pattern, with the weekly chart. We have no breakouts yet on Stokes, no breakout yet on RSI. So that's a bit of a concern. Volume yesterday was very high, so just be cautious here with these shares. Again, try to wait until as long as you can, until Friday, to ensure that we close out the week above weekly support. Riot Blockchain. I know Michelle Caruso Cabrera did. I didn't watch it. I know it wasn't the best of exposés in terms of news on Riot Blockchain. Michelle Caruso Cabrera is a pretty good reporter, so her credibility, with me anyway, is pretty good, even though she does work for CNBC. So Riot Blockchain, weekly chart, you could see that the market sent you signals, right? I could tell you for certain, where I long back here, I would not have gotten out at the top. I would have been a seller here at $24 per share. Why? It's because we leaned up and through the third standard deviation Bollinger Band. I probably would have gotten back long here and then enjoyed the rally higher. But the market sent signals several times here to get out. What were those signals? Let's go to the daily chart. We'll come back to the weekly. All right, so we rallied here up and through the third standard deviation Bollinger Band. Members know I see that, I am out, because the probability of us pulling back is very high, because I'll spare you the technical jargon. You're not supposed to be above these levels. And sure enough, we got the pullback. We consolidated and we rallied once again, and the shares more than doubled over the course of the next several trading days. Now, what if you had the cojones to stick with this trade? When did the market send you a signal to tell you to get out? Again here, topping tails, right? So you were leaning up and through the third standard deviation Bollinger Band yet again, but if you didn't listen back here or back here, why would you listen up here? Despite the fact that the market was screaming, get out. What signal could you have used to get out? Well, the fact that your RSI was putting in lower highs, despite the fact that we were breaking out to new all-time highs, that was a signal. The fact that your stochastics were not confirming the move higher in the share price, that was a signal. But suppose you weren't a member and you didn't know to pay attention to these. When should you have known, based upon simple textbook 101 technical analysis, when would you have gotten out? Right here on a new lower low. The market screamed to you after we flashed this bottoming tail here. Listen, folks, if we break down below this, you've got to get out. And if you had heeded the signal by the market, you would have gotten out. And they even gave you another opportunity. You see this all the time. I talk about breakouts on stocks and those breakouts being retested, the prior resistance level being retested to see if it will act as support. Well, in this case here, you had a prior support level being retested to see if it would act as resistance. And sure enough, it was. You had to get out right here or right here. The market sent you signals. And this is the beauty of learning the charts. So would I be a buyer of Riot Blockchain? No way. Let's go back to the weekly chart. On a weekly basis at current, we broke down below key support. Now you might say, you know, Bob, we're holding on to the 1040 level. Where do we close? 1092. Okay, it's a weekly chart. The week isn't over yet. What I would do is I would wait until Friday. Do we close back above this resistance level? You need to give your stocks or indexes a goal to achieve. If they fail to achieve those goals, don't reward them by buying them. With Bitcoin rallying and other blockchain names showing strength, and after doing some due diligence on this company, would I consider buying Riot Blockchain based simply upon the charts? Sure, but we need to close stronger on the week. The fact that we flashed a bullish key reversal here, the week of February the 5th and then reversed to flash a bearish key reversal soon thereafter. That speaks volumes to me. That tells me that there are a ton of sellers up here waiting for me to buy up and into resistance only so they could sell into me. I don't want any part of that. I'd rather wait for a retest of support back down here at 8 or even better, $6.30 before I opened up a position. Back to the daily chart. Again, on the daily chart, you could see that we broke down below support on Friday. Yesterday, we attempted to recapture and it failed. We held 1040. If this fails, if we put it in a new daily low, we'll probably come all the way down over the next several trading days down to $6.50 per share. So I wouldn't buy these shares right now. I think they're a watch. I wouldn't short them either. Too much volatility. And where would I short them? I can tell you right now, from knowing shorts and their mindset, if we rally up into this upper band of the declining downtrend channel, you're going to see shorts up here leaning into their short positions. So if we saw a close above this upper band of resistance, I would look to cover any shorts, and I would look to buy on a close above the upper band of resistance. Not an aggressive buy, but a buy nonetheless, and I would add on strength. So that would be the game plan with Riot Blockchain. Let's get to Bitcoin. All right, so Bitcoin has rallied very strong off the lows seen back in early February. We've come a long way really, really fast. The problem for Bitcoin longs is that we are at a resistance level. So while we have a breakout above this upper band of this declining downtrend channel, would I buy the shares? No, I can't. Why? It's because I know that there are a ton of sellers waiting to get made whole up here. When would I buy? On a close above this upper band of resistance, or on a pullback and a retest of this breakout point. This prior upper band of resistance should now act as support. So at current, while I believe that odds favor bulls, let's go to a daily chart, see if I'll maintain that position. Daily chart. Yeah, I think that odds still favor bulls. And what I was talking about, this is a great illustration. How do we retest a support level? Well, on a daily chart, we've already done so, right? We broke out here on the 17th. We pulled back, retested the breakout point. We actually failed. We broke down below it. But on the 19th, we rallied back and we closed back above the support level, and now we have a continuation breakout on the 20th. Now at current, that resistance level I pointed to on the weekly chart is right here. We're struggling to rally through it. You can see that it was resistance back here. It was resistance back here, back here. It was support back here, and it was support back here. So if we get above it, I think that you're going to see Bitcoin move a lot higher. But at current, you need to sit, watch, and wait. Again, as I just mentioned on prior charts, you don't want to reward a stock, an index, cryptocurrency with a purchase of its shares until, of course, it achieves a goal. What is the goal you expect of Bitcoin? My goal, my expectation of Bitcoin before it deserves my money is a close above resistance. We're not there yet. That may happen today, but we're not there yet. The discipline, the most difficult discipline for most traders to learn is patience, and that goes for me in particular. It does not come natural to me. It was a learned and a very costly learning experience. So trust me, folks, wait for a pullback and a retest of support using a stop right below it, or wait for a breakout above this upper band of resistance. Members, more to come on Bitcoin. Okay, the next chart up is Redcoin. Never heard of this one until this morning. So where are we at? We had a high on these shares of just shy of 33 cents per share. Obviously, we have pulled back dramatically. We have resistance above, which we have not yet cleared, unlike what we've done with Bitcoin. We have support below at around 4 cents per share, or per coin, sorry. showing my age. Let's go to a daily chart. Well, before we go to the daily chart, would I buy the shares based upon the weekly chart? No. No way. Now, the daily chart, which I've already taken a look at, is interesting in that here's that upper band of resistance, same line. We have rallied off the lows. We're putting in higher lows, higher highs. We are flashing a doji star formation, meaning it's a sign of indecision. Now, if we rally up and through this upper band of resistance, wherever that is, it could take several days. So where that is right now is at current, just shy of 12 cents. But that resistance level is subject to change because it is declining. So I would be a buyer of red coin on a breakout above this upper band of resistance. Ideally on a weekly basis. If you're going to speculate on a daily basis, that's fine. Just use a stop, a mental stop anyway, right below this lower band of support if we break back down. And that's it, folks. If you have any questions, shoot me an email. Members, if you want to talk more about these charts, post your comments in the forum. Let's have a discussion. I will be in there later on today. Have a great trading day, a profitable trading day. Keep an eye on the economic data, and I will talk to you soon. Be well.